Afternoon, everybody. Today, we're just going to go over my market wrap-up report. Inside of that, we're going to talk through these each one of these topics in greater detail. I'm going to start off with this Bloomberg terminal post that came at the end of the day. It has to do with the Fed pushing for the discount window instead of having people go to the BTFP, which people affectionately labeled by the F and dip. This is an interesting thing. I know a lot of people looked at this as being very positive initially. Arthur Hayes, he's an old school crypto guy from BitMEX. He has a different take. He actually thinks that this will probably be problematic, and it'll show that banks potentially are in trouble because the discount window, you get to find out who the banks are that are having issues, whereas the BTFP, it's kind of hidden. So that's an interesting take. I actually think that that's probably more likely, which again could lead to further issues. So this initially seemed positive note earlier in the day that makes it look like, oh, liquidity is going to be better, everything is going to be great. I don't really know what it means yet. So I would suggest that people be cautious and not take this as being 100% a positive. Zero Hedge posted too. He said U.S. plans to push more banks to use the Fed's discount window. Translation: many more banks will have to use the discount window right after the BTFP expires, which is going to be happening in a few months. But again, I don't know that that's actually a positive. It could be a bad thing because it could make it to where some of these banks have more of a run on them, and we don't want to see that. So I just wanted to throw that out there as a cautionary tale that just don't get super excited about this. Not yet, not until we find out more than a couple of sentences. Next, the stock market. Stock market did really good today. Might not have felt that in the Bitcoin and crypto world, but if we look at the SPX, I was talking about this in yesterday's video, that I thought we were bouncing and that we did a great job of bouncing off the fib here and that it looked like we could go higher. Let me zoom in a little bit too. And what did I just do? Okay. And that's exactly what we did. We ended up going up substantially here. And it looks like we might actually start breaking into a new all-time high on the S&P, and the Nasdaq is not much different. Actually, if you look at the Nasdaq today on the weekly, it looks like an all-time high. It is an all-time high. That Nasdaq had an all-time high today. So again, just back to my other point, I think global liquidity is definitely strong. Liquidity in the United States is probably ramping up. This is an election year. We're probably just going to see countries all over the world try and provide more liquidity so that they can get reelected. That's how things work. So NASDAQ with a new high, that's pretty cool. And the Russell, the small cap index, that got brutalized after my comments, and Tom Lee too. I was kind of following his lead, but I will take the blame. Talking about how small caps were going to be doing good. I still believe that's true. I think Tom does too. But you can see here where we back tested the previous resistance line and turned that into support. It was also bounced off the 200 weekly moving average. That's a thing of beauty. It just reaffirms the fact to me that I think this is all going to do really well. All right, let's hop back over here. You might already know this, but Bitcoin and alts got absolutely crushed today. One of the things I wanted to talk about with Bitcoin that I don't love at all is that it looks like we've clearly defined an ascending broadening wedge, and that you could see that if you see this upward trend here we're on the daily time frame. You can see where the wicks start. I kind of ignore them. You want to stick with kind of the bolder candles for when you're drawing these patterns. It's just, it gives you more consistent results. So as you can see here, you got the ascending red resistance line, and then you have this support line that keeps getting tapped down below. And I've said this in a few of my videos recently. When you have a support or a resistance line that keeps getting touched over and over and over again, it is more likely that you're going to break through it. And as you can see, we've had 1, 2, arguably 3, 4, 5, 6 attempts at breaking through this. And so I think we're going under. And I've said this before. I think that we could land at 38,000. I mean, that's where the 100 daily moving average is. And I'm modifying this. I said 38 to 37 before. That's kind of where we have a shelf on previous price action and volumes. But the measured move for this ascending, broadening wedge. If you look here, it's actually probably closer, depending upon how you measure this, down to this next volume shelf in the 35,000 range. There's another take, Benjamin Cohen, he's brilliant. He has this support band that he follows, and he said, hey, in prior cycles, we always hit the support band. His support band, coincidentally enough, is between 38 and about that 35-ish range on the bottom end of it. So he's saying we should find support on those levels. So I think we're kind of in agreement on this, and I think that's what'll end up happening. So again, targets, keep an eye out for 30, 38, all the way down to 35. I wouldn't be too greedy. Some people are talking 32, 31, where we really have like an absolute bottom. That's possible, but what I find normally is that people will try and front run, and so they're trying. Everybody's shooting for that target. Once the momentum slows down, or if there's too many orders above that, then the price action will stop. When the price action stops, everybody rushes in. Everybody's like, oh shoot, I didn't even cuss there. Oh shoot, I need to get in right now because it looks like it's been a couple of minutes and it looks like it might be going back up. And so what turns from excitement about it getting closer to their targets turns into FOMO and a fear of missing out if they don't buy at that time. And so then you see this rush in. So I never try to get like the absolute target for what I'm plotting. I don't think that's a smart move ever, because it rarely does that. It rarely goes exactly where you want it to. Usually stops a little bit beforehand. So anyway, just throwing that out there. Want to make sure that that's clear. Altcoins today, as you can see, they got royally butchered too. They're recovering a little bit now, but for the most part, they took a pretty heavy hit, including Solana. That one's doing a little bit better now, but that one was down quite a bit earlier today. I think down up to 9%. So you can see that's another reason I think we're dropping further. I talked about this briefly in one of my posts, but when you have altcoin weakness and Bitcoin weakness, and again, we've already seen a very steep drop in miners. And we'll touch on HUD a little bit later here and some of the others, but we've seen a very steep drop in miners. And when you see that, along with altcoins disintegrating and along with Bitcoin dropping, you're in a place where you're just waiting to get hurt. Because normally what you want to see when things aren't going to go down between one of these areas, altcoins or Bitcoin, is you want to see something outperforming, not just crap coins like Hex and eHex, which are the worst of the worst. Do not touch this stuff. You want to see Solana, you want to see Ethereum, you want to see Bitcoin, you want to see something doing well, and none of them are. So again, I would be prepared for further price downside. Let's see, oil. I touched briefly on this. There were more Red Sea attacks, and I haven't talked about this, and I don't know how many people are aware of it. The Panama Canal has had a major issue with very little rain this last year. And that is problematic because they can only handle ships that are so big right now. So you got backlog in the Panama Canal, and you have 20% of the traffic in the Red Sea coming to a crawl. So we're starting to see more pain there, so much so that oil actually started to get a bid again today. And so this is worrying me a little bit. I thought over here we were really close to breaking down and that would happen. Here, let me zoom in a little bit more. I thought that we were really close to breaking down and that was going to happen. But now this is turning from what I thought was a very clear breakout, because we touched this so many times, to still finding that bid. And that is the opposite of what I was just showing you with Bitcoin, because what I fear might happen is we might have soon an ascending triangle. Like, don't get me wrong. I'd say the greatest odds right now are like this, okay? I think oil could bid up. I think it hits that 200 moving average, probably something more like this. If I were to judge it, I would judge it more harshly. I would say it's like this. We're going to go up. We're going to hit the 200 moving average with oil. All the oil bulls are going to get excited around $77, thinking that we're going to the moon. And then they're going to get crushed as they realize that they're in a bear flag, and this thing's just going to get down into the 60s, like I was talking about. And again, cheaper oil, it's a good thing as long as the economy can hold up. And we will be talking about a lot of economic data here in a minute because there was a lot that came out today. Next, though, I want to jump to the dollar real quick. So the dollar actually performed okay today. It was up a little bit, not too much. The thing I don't like right now, I was hoping to get a clear rejection off of this. The thing I don't like, I've shown you this in other images, but the orange is the 200 moving average. We're pressing up against it pretty strong right now. So now I'm worried that we might break a little bit higher. But what I'm hoping will happen is we'll get a rejection off of this and we'll start breaking down. If that happens, we could still be in a good place. But we could also be forming like almost an inverse head and shoulders. So this is something to watch because, again, if the dollar starts taking off, there's a chance that that will start to bring markets down too. So keep an eye on it. Let me see here. Economic data. All right, real quickly, I'll show you this view. So I'll just glance through these real quickly. And I do have the charts too. We could look at them. But all of this was pretty good, except the Philly Fed Manufacturing Index for January. That showed, just like the New York one, that it was pretty rough. It was negative. It's trending down. That's not great to see. Philly business conditions went down too. You can see, though, the rest of the stuff, continuing jobless claims, those are lagging, but I mean, they look good. Unemployment hasn't changed much since the last report. It was actually lower the last time we had a read. Building permits are picking up. Housing starts are picking up. There's some decent stuff in here. Even CapEx looked good. It was negative before. It was positive this time. Employment on the Philly Fed didn't look as bad as the previous reading. New orders didn't look as bad as the previous reading. Prices paid were lower than the previous reading, which you want to see. You don't want to see inflation. You want to see deflation, at least a small amount. You don't want to see dramatic deflation because that could be a sign of other problems. But all in all, this all looked pretty good. Let me see real quickly. I'll see if I have... One sec. I think I had these in order. Yeah, okay. I'm going to zoom back a little bit because I do want to show you some of the charts that I went through earlier today because there's good stuff in here. So first off, initial jobless claims. One of the things I like about this, for over half a year now, initial jobless claims have been trending down, and these are near pretty historic levels. That's great. We want to see that going down. Let me see. That was initial. This is continuing jobless claims. They're trending down too, at least since about October. So again, continuing shows, oh, okay, people, and the other one, obviously, initial jobless claims mean they just lost their job. This one means that they could be stacking up and we could be seeing more and more people that are sitting there without jobs. So this started to climb pretty good in September, and that was a worrying sign, but now it's starting to come back down. So for now, this is a positive. Housing starts. This actually looked good to me. Again, we outperformed consensus and forecast. We're up. We've been trending up since 2008. We had some brief moments down, but it's good that housing starts are still remaining strong. We still don't have enough housing. Houses are unaffordable. I do believe in the spring that we're going to see existing home sales open up, like I've talked about many times, with falling rates. And the rates did fall again on the 30-year mortgage. It dropped to the lowest level we've seen in a while. So that's good too. But I think that this is very positive. I want to see that continue to trend. Building permits. You can see here, it looks like for over a year, we've seen building permits going up. That's a great sign. We had a really rough period there from like 2021 to 2022, where building permits were brutal. But that pattern is looking good. The Philly Fed Manufacturing Index. This is the one thing I wanted to point out about it that I thought was kind of a positive. So you could see where since 2021, this was trending down all the way to 2023. This thing was brutal. Like, it was just going down and down and down. The one thing I like right now, even though we could be rolling over and we need to watch it, is that we're trending up. It's a slow trend. It's not a very strong trend. I'd like to see us get closer to that zero out of contraction and potentially nearing expansion range. But it's a positive thing, even though the number didn't look good and even though it was below expectations. So I think that there's some hope here, but we should watch it. Okay. Fed business conditions. So again, this is surveying. This was lower than expected. Previous was 12.6. This was -4. I don't like that trend. I shouldn't say I like anything. I don't like that we're down near these lowest levels. If anything, that could maybe be seen as a positive, like maybe we're going to establish a higher low like you'd see on a chart, and then we'll start trending higher. I want to see that. If we don't see that, that's starting to worry me. Prices paid. Again, like I said, the prices paid have been dropping since early 2022. That's not a bad thing. All this means is what I've been preaching for over a year now, that inflation is dead and it is not the concern that we need to worry about, that's been true. And it looks like it's continuing to be true. For the people who haven't heard me in other videos, China is exporting deflation to the world, and I don't see that slowing down anytime soon. All right, let's see here. What else do we have on our list? I sold Hut. I'm not going to rehash all this. I have another video about it. You can see it if you go here to the wrap up. You can see this video. Essentially, I sold out of 90% of my portfolio. I would have sold out of 100% of it, but I was unable to because I was buying the dip before I realized what was happening. And then somebody showed me this research report. I think it's pretty damning. It's not a great report. I did talk to Sue. I don't know if I'll be doing an interview with her or not, but I know she's trying to get some stuff together to basically refute the article. So she's working on it. So we'll see what happens with that. So I'm leaving that alone for now. But again, I am so risk off. And I know this sounds weird from a guy who made 700% last year and who's invested in fintech options and ARKG and Bitcoin related investments and Bitcoin miners. But I actually don't like risk. I believe I do a pretty good job of balancing reward with risk. I always look for asymmetric opportunities, but I don't like losing my stack. And I had over $200,000 sitting in Hut, and I won't accept 100% loss on an investment where I could be making 10x between now and the end of the next cycle. I don't like giving up $2 million. It's just not my thing. Okay, so that's why I'm out for now, but we'll see what happens with Sue, and we'll see if we do an interview or what happens. But I'm looking forward to it. I know she's working hard to get something together. PayPal. Oh, and before we jump to that, just real quick, Hut. So 23.28% for a drop today. Pretty big deal. So, and then we're down 0.8% after hours, which also isn't super great. But we'll see where this lands. But yeah, it took it on the chin today. I got out at about -9 to 10% on the day. So I saved about 13-14% from where we are right now. So that was a happy moment. PayPal. Oh, PayPal. Up 4% today, including after hours, pressing up against the downward resistance line. This is a thing of beauty. I would expect the measured move to head in the 70s here shortly. So that gets me excited. You see peak volume here at about $73. So we could see a drop when we hit that, or at least a pause, maybe grind up against it before trying to go higher. But once we break above that, if we can establish support in short order, I would expect $100 a share. And January 25th, we have their big unveil about what they're doing with their product. And then about, I think, second week of February, we have earnings. I don't know if you guys saw my YouTube video on this. It's in the market wrap up too. It was great. I thought that the CEO did a wonderful job explaining everything away. Alex did. I mean, he did a great job. He told them that they were going to shock the world. That is a bold statement, and he is the kind of person that I think will deliver on it. They didn't post the full video. That's why you want to watch the one that I put inside of there, because they didn't talk about like the single platform, which he mentioned. They didn't talk about the fact that he said that they're still seeing strong transactions in January, just like they saw in December. So he said that even though the world seems like a scary place and consumers seem scared, they're still spending. So that's a pretty big signal that maybe macro is okay too. So in the company, again, I'm really excited. You could see how quickly narratives shift. We were in $57. We broke underneath of it the other day, and now we're at $62.32. So again, don't worry about price. Don't worry about other people's stupid narratives. Figure out where the future is and figure out what's most likely to happen and figure out where the opportunity is. Because again, when we look at this thing, it is sick. It is sick how much PayPal has fallen. This might have felt like a good couple of days, and it was a good couple of days. I'm up like, I don't know, $60,000 or $70,000 in 2 days because of this little move right here. But look at the potential. This is what I'm talking about. So again, I'm in options plays in this one, but I think the potential's solid. I don't know if how good of an opportunity the options are. I think I'm still down on them, so they probably can't be too bad. And if you want to be conservative, be conservative. Right now is a fairly scary time. You could just buy the stock, and get, I don't know, 130% return if I move things around here up to this 200 moving average where we could see resistance. And this thing's curving down. We might not even see resistance there. We've got a huge gap all the way up to 158. We've got another huge gap up to 223. This thing could go up a lot. I don't want to get people too excited, but it wouldn't be insane if the economy holds up for this thing to go up 300% in the next 9 to 12 months. That wouldn't be crazy. It wouldn't be unheard of at all. And it would still be way underneath its high from back in, two highs, back in February of 2021 and July of 2021, almost 3 years ago. I don't know, guys. Like, this is easy money to me. If you want to play this the simplest way, just buy stock. But I wouldn't miss the opportunity here. Anyway, let me see if there's anything else we want to talk about. Oh yeah, my portfolio. So I was down today. I ended up losing, 35,000 when factoring in realized losses. But you can't see those here because, again, they were realized, just like gains when you can't see them because they've been realized. It's just the way their platform works. It doesn't do a good job of displaying any of this stuff. But the big winners today, PayPal. Look at this, 34,100. Thank you, PayPal. Thank you, Alex, Chris. Love you guys. Okta did good. My Best Buy short. I think that's a winner. Even if the economy doesn't fall apart, who goes to Best Buy anymore? I'm loving that one so far. Square is still doing good. Hood, I still think Hood is going to explode. Absolutely explode. I can't imagine. I know that trading volumes are going up. I can see that. I can see trading volumes going up just by looking at my X account. And I kind of took some days off. I didn't do a lot these last few days, but the trend is up. People are coming here, and it's not just me, it's other people too. They're coming and they want to know more about finance. So that's a good thing for Hood, man, especially with all of these funds that wouldn't support Bitcoin ETFs like Vanguard. And I think I heard Bank of America, maybe Wells Fargo, just a bunch of them. And it's like, okay, if they're not going to support it, Hood's happy to. Hood even made a couple of posts that were hilarious. Let me see here if I can find one. I better do it this way. Robinhood. So let me see what I can find from Robinhood. They had great posts. These guys have they're just very cool with marketing. Oh, if it comes up. Okay. Yeah. Look at this. Now get a 3% match on all IRA deposits with Robinhood Gold. They will give you 3%. 3%. Transfer over $100,000 or $100,000. 3% more. 30th. They're trying to pick up all these people that are unsatisfied with their brokers because they won't let them have access to things that they want to invest in. This is brilliant. I'm gonna retweet this right now. But then they just had like a bunch of little jokes and things. Oh yeah, look at this. Is your brokerage holding you back? We have all the Bitcoin ETFs and are offering a 1% bonus on brokerage transfers into Robinhood, Vanguard, and then it shows the Bitcoin ETFs out there. And then this one is my favorite. It shows you, Bitcoin ETFs, Vanguard pulling you away. Like, this is beautiful. Robinhood is going to crush it, man. They're going to crush it from allowing people to trade crypto, allowing them to trade these ETFs, pulling people in for what? And they've been trying for over a year to try and really push IRAs. Now they've got that opportunity to steal those from the old guard. That's beautiful. So I think Robinhood could do really well. I think people are missing out there. Oh, another thing I wanted to mention, my account, I've got almost 500,000 in cash. It's a lot of money between all of my accounts. Some of this is for personal spending, but I sold, like I said, 90% of my HUD, over $200,000. I sold a ton of the ETH, like 90% of it, because I'm worried about downside price action. That actually worked out pretty good. Again, the HUD got absolutely destroyed. But when you look at ETH here too, ETH didn't have a great day. It was down 6% on close, but it was down like 7-8% at one point. I think that could see further downside pressure. You got this rising, broadening wedge here too. So I'm not super excited about ETH. So I wanted to get out of that too. I'm just trying to reduce some of my risk. Would have been great if I would have known this a month ago, if I had the foresight to realize that with Bitcoin, and I talked about this in one of my other videos, that Coinbase is the custodian for 9 of 11 of these funds, and Coinbase has Bitcoin reserves for their OTC desk, the over-the-counter trading, and they have a lot of it, from what I can tell. I don't know if it's 10 billion, 20 billion, 30 billion. There's a lot of different numbers I've heard and listened to. But here's the thing: the inflows and everything that we're looking at, when you look at net flows, they've maybe seen it $1.5 billion, 2 billion in demand so far. So, and it's picking up, and it will continue to, and they'll have to start tapping spot, which is basically regular markets. Think like retail, or just going to the exchange desk and saying, I want to buy 5 Bitcoin. That's spot, right? Versus futures, versus options, versus all this other stuff. So, but they're going to have to start pulling from that. And then is when we're going to see this supply crunch, because we're going to have a crazy supply crunch. That's coming. And you're going to see that. Oh, there's something else. I got to find this. I posted about this earlier in the day. And I totally forgot to include it in my wrap up, but it is gold. It is a really good post. Let me see if I can find it real quick here. It's before all this other garbage with Hut. Let's see here. Oh, post too much stuff. And again, I would encourage you to watch the other videos that I already posted about PayPal, about Hut. If you have any questions, the stuff's out there. I'm going to try and do more of that because I want to give you guys. Oh yeah, here we go. Right here. So here's the one I wanted to show you. I missed this earlier, but this is a big deal. So Eric is the ETF guy. He was kind of the guru that everybody was listening to, and the one I was listening to, and how I knew that this was going to happen. So he's talking about how much money is flowing into these. So I threw out something based upon some of my calculations, and I could probably post these. But I was saying we could see 3 years of Bitcoin's daily supply consumed by May 1st. That factors in a number of different things. 900 Bitcoin getting created right now, and then after around the beginning of April, 450 getting created each day, and just how many are getting gobbled up by these exchanges, because it's a lot. And so I am super excited. Like, some of these numbers. Oh, let me see. I've got one with the actual numbers here too, I think. Let me find it. Some of the numbers I was getting out. 3 years. Yeah, 3 years by May 1st. Let me see. I thought I had it here somewhere. Sorry, guys. I should make sure I have this up before I come in here. Okay, I don't know where it is, so we'll leave it alone. But all I'm saying here is that we're 3 years of supply by May 1st being gobbled up is insane. We're looking at, everybody talked about uranium and what happened when they ran out and they had to start going to spot markets, and that price went exponential. And I can show you that real quick. Here, let me just pull up maybe like Eura, I think. Yeah, there's one of them. So like, again, this price down here, $18 to 32, that's a great number. And I don't know if there's a better uranium play. This isn't really my forte. I don't know where the actual commodity is, but whatever. For uranium, this was a great move. And again, it's been pretty parabolic, and now it's getting ready to establish new all-time highs. So this is the kind of stuff we're going to see with Bitcoin, but it won't be like a doubling. It'll be a lot more. We've never had the level of interest that we have right now with these Bitcoin ETFs. And then you have a halving on top of it. Then you have the potential for Hong Kong to release another 5 to 8 of these things in their region, because they're trying to get this money too. It's going to get nuts. I nickname it the double halving for a reason, because I think the effect of what we're going to see this cycle is going to blow away everything else that's come. So again, maybe Bitcoin goes down further. I've got cash for it. And another reason I felt comfortable getting the cash is I think PayPal is going to explode, like I said. And I make if where we're at right down here makes it up to here, near that 200 moving average, I make over $1 million. So again, having 500,000 in cash, just in case things get not so good here in the near future, I think that's prudent. And again, if nothing happens and everything looks beautiful, there's always something to buy. I've got my fingers in so many pots. There's always something that you can purchase. Again, small caps, maybe that'll be desirable. There's so many things that you can tap, even just jumping back into Bitcoin and some other miners. So I'm not worried about it. That was my personal decision just to do that because I'm seeing weakness I don't love. I don't love an ascending broadening wedge. I've been screwed by those way too many times, and I'm not going to let it happen again. So especially after this HUD news, that was the signal to me that somebody was saying, the world was saying, the universe, whatever you believe in, was saying, hey, maybe you should be cautious here. Maybe you should have been a month ago, but be a little cautious here. You've got some plays that are taking off, and see what comes in the next day or two. So that's my plan. I went through a lot. God, I talked a lot. Sorry about all that. 30 minutes. Geez. See if anybody stayed around for that. If you stayed around, make sure you comment. Anyway, love you guys. I will see you later. I hope you have a good night. Don't be scared. Bitcoin miners are going to take off. They're going to get there. They're already getting a little bouncy. If this stuff with HUT didn't happen today, I think we would have been sitting a lot better. I think that was just extra downward pressure. You could see these things trying to bounce. So again, let's see what happens. Little dry powder sitting on the sidelines to buy a dip is never a bad idea. So love you guys. Talk to you later.